Peace and love, peace and love, peace and love. You're now rocking to the sounds and vibrations of your boy, Don Kilam, also known as Malik Kilam. And as always, prosperity is your divine birthright. Damn, I'm dropping the phones. My apologies. Let's start over. Peace and love, peace and love. You're now rocking to the sounds and vibrations of your boy, Don Kilam. Also known as Malik Kilam, as always, prosperity is your divine birthright. Let me spark the blunt. I'm already 2 blunts in today. But rich risings, everybody. I know some of y'all on the West Coast just getting up. 6:30 on the West Coast. I'm about to be on the West Coast, so if you're on the West Coast, hit me up. All right? Hit me up. Now, as always, I'm not a licensed attorney or tax expert. I do this for educational and informational purposes only. Whether you're on the live or the replay, let me know where you tapped in and tuned in from. Rep your city, man. But I'm going to drop some game today. I'm going to drop some game. I always drop game. I do have books coming out in the private, not necessarily going to be in the public. I got a lot of information that I'm dropping from my private members and people that have one-on-ones. But this is something that I go over every day. A lot of people keep talking like they're not understanding securities. We got Arizona in the building, Atlanta in the building, Tijuana in the building, Oklahoma in the building, Wilmington in the building, Oakland in the building, Tyler, Texas in the building. Peace and love, peace and love. We got Miami in the building, North Dakota in the building. Let's go. Texas. We smoking on backwoods because we rocking with backwoods now, man. We had the sponsors for Swisher Sweet, and we got sponsored by Backwoods. But this is like, I'm not even a whole pack in, but this is that banana, man. Shout out to Backwoods, man. I go ahead and show them off, man. We rolled up, man. Big Stogies, Big Bob Marley's, Big Suge Knights. Shout out to Las Vegas. So stay tuned this week. Stay tuned this week. I will be on the West Coast. Nigeria in the building, Baltimore in the building, Rhode Island in the building. So check this out. Let's get straight to it, man. Let's get straight to it. Shout out to New York. Now, if you find any of this information valuable, leave a donation. You can either go to onlyfans.com/Don Kilam and leave a tip, or you can leave blessings on the Cash App. The Cash App is Dreamkeepers Radio. Dreamkeepers Radio. Dreamkeepers Radio. Don Kilam will pop up if you type in the right stuff. So Dreamkeepers Radio. All right, Dreamkeepers Radio. I don't care if it's $1, I don't care if it's $5, $10, $20, $50. Every dollar counts and is used to uplift humanity. All right, so check this out. What a lot of people don't understand is under the Uniform Securities Act, there's a state administrator. If you know anything about the Securities Exchange Commission, the state administrator is basically each U.S. state's version of the SEC. Okay? There's rules and levels. You have to go about this shit, but I'm gonna break down what's exempt securities, okay? Now, exemptions allow issuers and other interested parties to avoid the security registration process. And this is what's going on. All right. So the U.S. government securities, they're creating securities right in the courtroom. These securities are exempt from being registered. These are private securities. And so are national foreign government securities, which if you have your own foreign government, these would be exempt from being registered. Bank securities, insurance securities, all right, railroad, common carrier, and public utilities. Public utility securities are exempt from being registered. Federal covered securities, nonprofit securities, and promissory notes, okay? The same way with employee benefit plans, whether it's off that Social Security trust. So you got to understand, these are exempt from being registered. The following descriptions of exempt securities Begin with a direct quote from the Uniform Securities Act. This is the USA, the true definition of the USA. I need everybody, if you understand what this means, I need you to look it up. This is the true definition of the USA, and with them, and this is called the Uniform Securities Act. Got to hit the blood on that. Does everybody understand? Uniform Securities Act. Now, any security, including a revenue obligation issued or guaranteed by the United States, any state, any political subdivision of a state, or any agency or corporate or other instrumentality of one or more of the foregoing. Any security issued by a government of the United States is considered exempt. Generally speaking, there are 3 layers of government securities to be aware of, and that's Treasury securities, which is federal, agency securities, and municipal securities, because these municipal securities, municipal bonds, is what's creating your city. And you got to understand this is all being done in the private based off your labor and the Social Security. People got to understand this is a public position. So with that being stated, when you're trying to claim the birth certificate, when you try to claim the Social Security card, and all these things, you're claiming it's yours. You're saying that's my name, that's my documents, that's my instruments. You're claiming public property that belongs to the USA. You got to understand the Uniform Securities Act. Now, when it comes to, unlike Canada, exemptions for other foreign governments are limited to those of national, federal governments. For example, a bond issued by the French government would be exempt, but a bond issued by the city of Paris would not be exempt. The U.S. maintains diplomatic relationships with countries, not local governments. Additionally, the U.S. must be on good terms, diplomatic relations with those foreign governments. So the federal government can only deal. So you got to understand. So a municipal bond, the way things go, is not going to be exempt on a federal level. All right, a municipal bond can't be exempt on a federal level because they only deal with countries. Now, bank securities. Any securities issued by and representing the interest in or a debt of or guaranteed by any bank organized under the laws of the United States. Everyone's already a private bank. Got to understand that. And this is how your name is a private bank. I need y'all to understand that. When you're claiming these documents, you're claiming this position, this is the part you're taking, all right? And the way they set it up for you, you got to understand, the public position is never going to be set up in the best interest of you. So when you're claiming these things, they're not putting you in a great position at all whatsoever. So any security issued by and representing the interest in or a debt of or guaranteed by any federal savings or loan association or any building in or loan or similar association organized under the laws of any state and authorized to do business in the state. Any security issued or guaranteed by any federal credit union or any credit union, these are all exempt. So let's summarize all the banking entities that qualify for this exemption. These are the banking entities that qualify for the exemption. So I'm going to say this once because everybody asks, where are you reading from? I'm reading from my private estate. That's where the fuck I'm reading from. And if you want to know where the fuck I'm reading from, you will drop a donation and learn how to get in tune and rub shoulders and learn how to get in tap with the private estate. That's why it pays to become a private member, have private sit downs with your boy Don Kilam. Now, back to the subject. Let's summarize all the banking entities that qualify for this exemption. Okay, banks, saving institutions, a trust. Say it again. A trust is a private bank that qualifies for security exemptions. So your security never has to be registered. I'm telling y'all how to maneuver correctly because you think you have to follow UCC Woods. Y'all think y'all have to do this. You need to know the law. You need to learn how to be a secure party creditor. At the end of the day, a lot of people are not moving as a creditor. They're still going in there speaking codes and statutes. A creditor is going to go straight for the security. Secure party creditor. We're going straight up to securities. We're talking securities here. Insurance is a private agreement. Any security issued by and representing interest in or of debt or guaranteed by an insurance company organized under the laws of any state and authorized to do business in this state, but this exemption does not apply to an annuity contract, investment contracts, or similar securities under which the promised payments are not fixed in dollars but are subsequently dependent upon the investment results of a segregated fund or account invested in securities. Exempt securities. Nonprofits. Securities issued by nonprofits of many forms, including these issued by churches. They securitize your baptismal certificates. It's a private security. And charities are considered exempt from registration. However, the USA provides the state administrator with the ability to remove the exemption should they suspect fraud or any other sketchy situation. This is for good reason. The North American Securities Administration Association, the NASAA, has witnessed numerous instances of affinity fraud over the years. Affinity fraud is a form of fraud that targets members of cultural, ethnic, or religious groups. Promissory notes are exempt from registration. What do you think you're doing when you fill in the UCC-1? You're registering it to the public. I'm going to say this again. What do you think you're doing when you have a UCC-1? You're registering it to the public. When people, what provides evidence for a lien? That's a security agreement, and then usually we have a promissory notes attached to it. You do not have to register this with the public. When you register it with the public, it's no longer exempt. A promissory note, draft, bill of exchange, or banker's acceptance that evidence an obligation to pay cash So promissory notes, also referred to as commercial paper. That's a key word. I like that. Commercial paper, an IOU. That's all fiat currency is, commercial paper. So promissory notes, also referred to as commercial paper, are short-term corporate debt obligations. So we can state this out the gate that a fiat currency, a Federal Reserve note, is a short-term corporate debt obligation. I like that definition. These securities are issued at a discount, pay no interest during the life of the security, which is a zero coupon. So if it pays no interest, this is a form of a zero coupon, and mature at par. As long as a promissory note does not exceed 9 months of maturity, it is issued in at least 50,000 denomination and is rated one of the 3 highest debt ratings. Example, AAA, AA, and single A, with Moody's and S&P Global Ratings. So promissory notes are exempt from registration. And this is coming straight from the North American Securities Administration Association. This is where we're pulling this information. The Security Exchange Commission. Commercial paper is an unsecured promissory note. That's what commercial paper is. It becomes secured when you do a security agreement along with the promissory note. Now it's a secured commercial paper. I'm hoping this is making sense. I know it's not gonna make sense for the average beginner. You follow me? So commercial paper is an unsecured promissory note with a fixed maturity. In layman's terms, it is an IOU. It can be bought and sold because its buyers, sellers have some degree of confidence that can be successfully redeemed later for cash. Commercial paper is a money market security. I'm going to say this again. Commercial paper is a money market security issued by large corporations to obtain funds to meet short-term debt obligations. Now, when you have to register something, when you're registering it, it has to go to the state administrator. When you're registering true securities, okay, real securities, the entity responsible for the interpretation and enforcement of the rules and regulations in the Uniform Securities Act, the real USA. I'm going to say this again. The real USA stands for the Uniform Security Act. Do y'all follow me? Let me try to break down the process. Let me try to break down the process because I jumped straight to securities on some of y'all, and some of y'all are lost. I know. But everybody else that is making sense, drop a 100, man. Let me know that you're with me, man. Some fire emoji, something. Let me know that you're with me, man. I got 100. I got some fire emojis. Okay. I will go back. Now I'm gonna go to the public. I'm about to use public rules now, right? I'm about to use public rules. I just stick to 28 USC 3002. 28 USC 3002. I'm gonna go quick because everybody should know this. Everybody should know this. Debt means any amount owed to the United States, okay? That's 28 USC 3002. This is definitions. First, go to subsection 2. Okay? Go to subsection 2. Court means any court created by the Congress of the United States, excluding the United States tax court. So we know these courts were not created by Congress. So it's a tax issue, all right? In this system, it's a debit or credit, asset or liability. It's a gift or it's a tax. If it's not a gift, it's a tax. So every court's a tax court. Go down to number 3, subsection 3, 28 USC 2002. Debt means an amount that is owing to the United States on account of a direct loan or loan insured or guaranteed by the United States. But you got to understand, the United States under bankruptcy. Number 4, debtor means a person who is liable for a debt. Person can mean an unincorporated association, trust, corporation, private entity. So you're always doing business. Number 13 means security agreement, means an agreement that creates and provides for a lien. All you need is a security agreement. State means the United States, number 14. And then 15, United States means a federal corporation or an instrumentality of the United States. So if you have a birth certificate, that's an instrumentality. If you have an ID, that's an instrumentality. That means it's the United States. And people just skip right over that. I don't know why. United States means federal corporation. In any instrumentality. So anything that's issued from their government, the state, whatever it is, it means it's the United States. So anytime you're using their documents for identification, that's the United States. You just said you're the United States, okay? A federal corporation. Now the USA is the Uniform Securities Act. Get where to get lost. Now, understand you can look up who owes the United States national debt. It belongs to the Social Security Trust Fund. It belongs to the public, over 24 trillion. Google these things. Well, how do we do these things? So what they do is they create something called a special purpose vehicle. There is no money, only fiat currency and credit, because you're in bankruptcy when you're playing the public game. We're playing the public game, it's just contracts. It's just paper. It's just agreements, okay? What is an SPV, a special purpose vehicle? Also called a special purpose entity. It's a subsidiary created by a parent company. So it's like a fictitious name or a DBA, a lower business under a bigger business, okay? To isolate financial risk. So a special purpose vehicle, also called a special purpose entity, a SPV or an SPE, It's a subsidiary created by a parent company. United States is the parent company. A parent means a parent who rents. Child or children is property of a corporation. So its legal status as a separate company makes its obligations secure, even if the parent company goes bankrupt. So the United States has went bankrupt. That's your parent. You're sitting there, they're saying you're its subsidiary. You're its child. The United States is your guardian now. If something goes wrong, they put you in jail. They always hold you in custody, all this. They take real good care of their children, right? So they're the bank, they're the parent company. They made your name a subsidiary. Your name is a corporate entity. It is a public entity. It's public property. The worst position you could ever be in, to be honest with you, because you got to understand there's a difference between the public sector and the private sector. All public banks are owned by the government. Public sector is the part of the economy that the government controls. The private sector is the part of the economy that the government does not control because the government cannot interfere with a private contract. So when you're creating contracts with this name, that's the government's name, all right? Under the bankruptcy, it's using your name as an SPV. Now, I just explained special purpose vehicles. Let me know that everybody that listened, that it makes sense. Drop a 100. See some fire emojis. You understand that your name in the public is being used as a special purpose vehicle. Let me know. I got to know I'm doing my job. Okay, I got some 100. I took it from the bankruptcy special purpose vehicle. Got 100s, got some fire emojis. I'd be like, this making sense for everybody. Okay? Now check this out. Now, your name's a sole proprietorship in the public. You're attached as collateral. Yes, he says, quit saying our government names. Yes, you're correct. You have to say, I work for the name. I'm gonna keep going now. So now you have to learn asset-backed securities. I'm fast forwarding to asset-backed securities. You understand? The United States is under bankruptcy. The United States is a federal corporation. Everything you're doing with that name, you're getting taxed. That's what's going on. There's no such thing as jail. It's debtor's jail, okay? It's a tax issue. Everything's a tax issue. They got you gifting it in the private and charging you again for it in the public. That's what's going on, okay? Double entry bookkeeping type shit, right? You got to understand accounting as well. So asset-backed security, what is it? How different types of securities work? I'm telling y'all, when you start learning this, then I'm going to show y'all how to start creating your own shares and stocks from your private corporation. That's what the birth certificate represents. It represents a share. It represents part of the stock of the United States Federal Corporation. Your piece of the bankruptcy. Instead, you can opt out of this, create your own in the private, and pledge the so-called public entity name to work for your family business, for your family trust, for your family government. You know, this is what you do. You do what they do. Instead of arguing and plotting and planning, listen, they don't owe you nothing. You owe it to yourself to figure out what they're doing so you can do it too. And you can do it even better. You understand? It's you got to learn the game. You got to sit down. You got to sit down and just be like, man, I led myself to it so I can get through it because God is good all the time. You understand? This is just shadow work, baby. When the light shows up, the shadow's going to flee. You got to understand the game. Now, what's an asset-backed security? ABSs. Everybody has asset-backed securities. If you're in the public, you have asset-backed securities. You know? And some of y'all just got that asset back. You dig? But an asset-backed security is a type of financial investment that is collateralized by an underlying pool of assets. Since this is real church, I appreciate that. Usually ones that generate a cash flow from debt. Hold on, say it again. Usually ones that generate a cash flow from debt, such as loans, leases, yes, leases, credit card balances, or receivables. It takes a form of a bond or note paying income at a fixed rate for a set amount of time until maturity. So let me put this in non-collab terms. If you got a credit card that you're paying monthly, if you have a loan, a mortgage, a lease, you're paying it monthly, everything in America is free. You're an investor. You're investing in something called an asset-backed security. It is a debt instrument. It's like a corporate bond or bond funds. ABSs are financial securities backed by income-generating assets such as credit card receivables, home equity loans, student loans, and other loans. And if you truly understood this, then you would understand why they're sending this check every month. You know, this bond every month. This is a zero coupon bond. I need to go back to it now. So you should be paying. All right. I'm not, listen. This is totally out the norm. Okay. You should be okay paying your bills every month, man. The family trust is going to pay it. Why wouldn't it? When you understand what's going on. Zero coupon bonds. Every month you're getting a debt instrument that's a zero coupon bond. You're understanding, listen. There's two different types of accounting. You got the cash accounting and the accrue accounting. So a zero coupon bond, also known as an accrue bond, is a debt security that does not pay interest, but instead trades at a deep discount, rendering a profit at maturity when the bond is redeemed for its full face value. You're getting it every month and you're sending it right back. And I'm gonna tell you what it is again, because I don't think you heard me. A zero coupon bond. When you get what you think is a utility bill every month, it's exempt from registration. So a zero coupon bond, what you get is a credit card bill every month. What you get is a mortgage every month. Listen, a zero coupon bond, also known as an accrue bond, is a debt security that does not pay interest, but instead trades at a deep discount, rendering a profit at maturity when the bond is redeemed for its full face value. You can redeem it for full face value. You can redeem it for full face value, but y'all are sending it back. I want to offset it. I want to discharge you. That's crazy. Now, and this is private information. I'll tell you what you want to hear in the public. I'll help you with whatever you need. You want to discharge your debt, I'll help you do that. If that's what you want to do. Matter of fact, I might buy it off you. Now, listen, some bonds are issued as zero coupon instruments from the start, while other bonds transfer into zero coupon instruments after a financial institution strips them of their coupons and repackages them as zero coupon bonds because they offer the entire payment at maturity. Zero coupon bonds tend to fluctuate in price much more so than coupon bonds. A bond is a portal through which a corporate or governmental body raises capital. When bonds are issued, investors purchase these bonds, effectively acting as lenders to the issuing entity. The investors earn a return in the form of coupon payments. Listen to what I just said. A bond is a portal through which a corporate or governmental body raises capital. When bonds are issued, investors purchase these bonds, effectively acting as lenders to the issuing entity. The investors earn a return in the form of coupon payments, which are made semi-annually or annually throughout the life of the bond. A bond coupon. A coupon or coupon payment is the annual interest rate paid on a bond, expressed as a percentage of the face value and paid from issue date until maturity. So they're going to give you coupon bonds until the maturity, until the fucking maturity of the whole contract. So coupons are usually referred to in terms of the coupon rate, the sum of coupons paid in a year, or the dividend by the face value. It's a dividend. You got your set coupon rate. This is what your bill is every month. You know? People, hey, I'm trying to show y'all what an asset-backed security is, what's really going on. Securitization process now. Securitization. This is the securitization process. You create the agreements. All this shit is coming from the public trust, the Social Security Administration. You got to learn how to create the same shit with your government. Create the same shit with your car company. Create the same shit with your private bank. Create the same shit with your home company. Create the same shit with your fucking private insurance. Whatever it may be. Whatever makes sense to you. Securitization. You can have your own private tribal court. These are men doing these things. Y'all act like it's somebody high and mighty. You think what I'm saying? This is nerds, motherfucker. This is nerds running this game. You know what I'm saying? This is fucking nerds. And y'all out here scared. Securitization pools assets and repackage them into interest-bearing securities. So they're taking a bunch of agreements and repackage them into interest-bearing securities. An issuer designs a marketable financial instrument by merging financial assets, commonly mortgage loans or consumer or commercial debt. Investors that purchase these securities receive the principal and interest payment of the underlying asset. In securitization, the company or the originator that holds the asset determines which assets to move from its balance sheet. A bank might do this with mortgages and personal loans it no longer wants to service. I'm telling you, you can go out there and go buy a bunch of mortgages and do the same shit. You dig what I'm saying? No. Get this dude about money. You know, you can go buy that, pennies on the dollar, and go collateralize them motherfuckers. You ain't even gotta know these motherfuckers. I'm trying to show y'all how to $1 million worth of game, man. Listen, the Cash App is dreamkeepersradio. I done gave y'all $1 million worth of game today. I don't even know if I should keep going. dreamkeepersradio is the Cash App. Yes, they says every month we get them dividend payments, and we out here hitting up the trustee for those dividend payments. You already getting them. Exactly. Y'all gotta understand what real money is, and y'all don't. Everything is real money in the bankruptcy system is going to be tax credits. Everything is credits, debits and credits. You got to understand it because it's accounting. They're setting up accounts for you. You know, everything is debits and credits. And just like somebody put in the chat earlier, GAAP. That's the rules. At the end of the day, when you're in the public, you got to go with the generally accepted accounting principles, GAAP. U.S. public companies must follow GAAP rules in preparing the financial statements. That's why, and this is revised by the Financial Accounting Standards Board, the FASB. And these are how I would start off anything. If I got problems with anything, this is how I'm starting it off. You know, this is how I'm starting it off. I'm going to be complaining with the GAAP. They're going to have to follow these guidelines, and they're going to have to provide different information when you're doing these things. You know, they're going to have to provide you with different information. You're going in there, you're going the so-called consumer laws. You're not going to get provided the full accounting. You want the full accounting of everything. You know, every court has a clerk for a reason. You know, private securitization process. You got to understand the private securitization process. When you're in the stock and bond market, when you start learning Series 6, Series 7 training, you're gonna start learning this shit, man. So a bank, the greater group of assets is now considered a reference portfolio. All right. A reference asset is an underlying asset used in credit derivatives to protect the debt holder against a potentially risky borrower. A reference asset is also known as a reference entity or reference obligation or a covered obligation. A reference asset can be an asset like a bond, note, or other debt-backed security. I need y'all to know that debt is money all day, especially when you understand your portfolios. People get a net worth through debt in the public system. And you can learn how to convert it to equity. So securitization allows the original lender or creditor to remove assets from its balance sheet to underwrite additional loans. Investors profit as they earn a rate of return based on the associated principal and interest payments made on the underlying loan and obligations by the debtors or borrowers. So every payment, they re-securitize these motherfuckers. They after a certain amount of time, they file these agreements as abandoned property because you didn't acquire them. Because I already proved to you that the promissory note, the commercial money is real money. I've already proved to that. Commercial paper money. Commercial money. We talked about that earlier. Let me see if I still got it up here. Commercial paper is the global financial market is an unsecured promissory note. This is real money, but it becomes securitized with the security agreements. And that's what they're doing. They're taking these IOUs and they're securitizing because you didn't. Hope that makes sense. You can capture these agreements. You know, where's the money at? The money's in the agreement. The money's in the promissory note. You know, when you get paid out insurance, you know, the agreement, that's the money. Same way in court. all the agreements at the end of the day determine the money. Everything is debits and credits. As simple as that. Cash versus accrual method of accounting. Understand American Depository Receipts, ADRs. American Depository Receipts are negotiable certificates issued by a U.S. depository bank representing a specified number of shares. I'm not going to get deep in all of this, man. But this is what the fuck is going on in America. This is how money is being made. When you, I'm gonna get deep. So I'm gonna get deep real quick. I'm about to go all the way left field. A lot of y'all about to get lost. So far, I've explained the United States is a business. It's a corporation. They created something that you think is your name, turn it into an SPV. You need to quit trying to claim this shit because when you ownership means obligation, obligation means liability. They saying you're the child, they're the guardian. Anytime you claim a debt, you claim these instruments, that all belongs to the United States. When you start paying bills, you start paying debts, they securitize these agreements, they turn them into asset-backed securities. If it's a mortgage, they turn it into mortgage-backed securities. They create pass-through trust, and this is how they pay the investors after 36 months because you are the real investor, and they're going to send you payments all the way up until the date of maturity. These things that you think are your bills are really zero coupon bonds. And this goes along with the 1099 OID process, 1099 INT process, 1099As, and all that good stuff. Now, when we talk about securities, you're going to get into 1099Bs. And a lot of different things. Let me know that everybody's with me so far. Yes, the SPV, special purpose vehicles. Yup. I went over a lot so far. I broke down $1 million worth of game in a short period of time. I can do this shit in my sleep. The reason why a lot of people can't rock with me is because they can't see what I see. They don't know what I know. They ain't put in the work that I put in. They're not sitting in the rooms I'm sitting in. They're not sitting around greatness. I see y'all. Okay, we got 100s. We got fire emojis. Breaking this shit down for y'all. You find this information of value, make sure to leave a donation. The Cash App, you can drop a badge too right here. But the Cash App is Dream Keepers Radio. Dream Keepers Radio. Yes. It gets deeper than this. This is just what I can bring to the public. So just know, they're with special purpose vehicles. They're using a special purpose vehicle. They're sending it zero coupon bonds for anything you applied for with your Social Security trust. All right. That's what I need y'all to know. And this is done through with a cure bond. A zero coupon bond, also known as an accure bond, is a debt security that does not pay interest, but instead trades at a deep discount. And you get a big profit at maturity when the bond is redeemed at its full face value. I appreciate the badge, Lady Prosperity. Now, learn accounting, GAAP, generally accepted accounting principles, and that requires accrual accounting. And that's cash accounting records, revenues, and expenses when they are received and paid. But the Internal Revenue Service requires accurate accounting for businesses making an average of $25 million or more in sales for the preceding 3 years. And these securities are making that. All businesses need to keep accounting records. Public companies are required to do so. And this is what I need y'all to know. All public companies are required to keep accounting records. This is what the fuck you want. You know, this when it comes to court, because they have a clerk, when it comes to anybody that you're dealing with, you want the accounting records. If you have an account with them, you have an account number, you want the accounting records. That's what you want, you know? In court, they talk about the motion of discovery. No, I want full accounting. I'm not going to get deep in accounting, though. But when you start learning, so this is the accounting side of securities. So the Securities and Exchange Commission requires public companies to file statements and other disclosures. Financial professionals and investors rely on SEC filings to make informed decisions, okay? Now, the first form, if you're in the public and you have an IPO, is going to be a form S1. An S1 is the initial registration form for new securities, all right? Required by SEC for public companies. So these are the forms you're going to go after, all right? Then the form F1. The form F1 is filing with the Securities Exchange Commission required for the registration of certain securities by foreign issuers, all right? Because you're a foreign issuer. Now, Schedule 13D is a form that must be filed with the U.S. Securities and Exchange Commission when a person or group acquires more than 5% of the voting class of a company's equity and shares. Form 144, notice of proposed sale of securities. If they sold your securities. SEC Form 144, notice of proposed sale of securities is a document issued by the SEC. It must be filed with the SEC by an executive officer, director, or the affiliate of a company when placing the order to sell that company's stock during any 3-month period in which the sale exceeds 5,000 shares or units has a sale price greater than $50,000. When you learn how to do it in the public, you can also ask in the private. Your name is a public entity. That social, under the Securities Act of 1933, that name is a public entity. And then when you start asking for those, that's when you get the ADRs. You want the American Depository Receipts. They're negotiable certificates issued by depository banks. Once they've traded your stocks or securities, they get the American Depository Receipt. And that's $1 million worth of game, man. We got sponsored ADRs and we got unsponsored ADRs. They got level ones, level twos, level threes. And when you're doing public offerings, this is what they receive. And this is trusteeship. This is true trusteeship at its finest. I broke it down $1 million worth of game, man. Let me know that this all made sense from zero to hero. And that's what I'm bringing to the public today. And you already know there's a lot more. There's a lot more. But every company has something called a prospectus. So when you're dealing with them, we're coming at them as the debtor, though. Because you don't have rights. You don't have rights when you're coming at them as a debtor. You have to come at them like you're the investor, because it's your money. You dig what I'm saying? It's your money. You're the main investor. A prospectus is a formal document required and filed with the Securities and Exchange Commission that provides detail about all your investments offered to the public. A prospectus is filed for offerings of stocks, bonds, and mutual funds on all accounts. The prospectus can help every investor make better informed investment decisions because it contains a host of relevant information about the investments or securities. In areas other than investing, a prospectus is a printed document that advertises or describes an offering. So the Securities and Exchange Commission requires that if they're filing securities, they have a prospectus for every investor that's offered to the public. So when you understand you are the secured party creditor, you are the investor. It's your Social Security trust that they're operating out of. But you can't claim it as yours because it's a public position. You have to claim to manage the affairs. You work for this name. You work for this position. You on behalf of your client. You follow me? I work as Malik Kilam. I work as Don Kilam. I'll never say that's my name. I work for that dude. You know what I'm saying? I work for that government name. I work for that government entity. And I need to see the prospectus. I need to see where do I fall at? What's due to me? Where's the books? Show me the books. Show me the books. Y'all cooking the books. You know, and you got to know how to enforce your claims correctly. You know, they have a preliminary prospectus. This is the first offering document provided by a security issuer. You know, you got to understand what's going on. Companies that wish to offer bonds or stocks for sale to the public must file a prospectus. Companies must file a preliminary and a final prospectus, and they must meet the SEC guidelines. If they have an IPO, initial public offering, if they're offering things to the public. Now, what a prospectus will include is name of the company's principals, name of the banks and financial companies performing the underwriting, the types of securities being offered, whether the offering is public or private. If they're in the public, they have to disclose these things if they're even doing private business. They're going to let you know exactly what security dates are offered and what interest is paying, and the maturity dates of all the notes, the issue dates, which yet have to be determined, how the interest will be paid, and the denominations to be issued. Use of the proceeds and how the money raised will be spent, which might include financial operations, paying down debt, or buying back stock. This is $1 million worth of game, everybody. $1 million worth of game. I hope that makes sense for everybody as well, man. Tap in and tune in with your boy Don Kilam, man. I'm trying to tell you, with prosperity is divine birthright. Go to the onlyfans.com/Don Kilam, sign up, become a member today. Tap into DonKilam.com and DonKilamUniversity.com. I got more animated courses and more courses on the way. We're going to be dropping courses on this and getting everybody set up correctly as well, man. Find this information valuable. Leave buy a badge on the Instagram, you know, drop a tip on the OnlyFans, book a consultation, tap in and tune in. The Cash App is Dream Keepers Radio. Dream Keepers Radio, man. Much peace and love. And remember, prosperity is your divine birthright. Peace.